Yeah. Hi friends. Yeah, let us get into the account. Ind AS 23, which is borrowing cost. Let me have a quick revision as usual. Okay, I'll take a small revision which will be helpful for handling these questions and answers. Okay, yeah. So now the question is, Ind AS 23 borrowing cost is almost same like accounting standard 16. There are some more points are there. Which will be coming in the revision. Yeah. So what is borrowing cost? Basically, the costs which are directly related to the borrowings. I am incurring only because I have borrowed. I would either otherwise I would have not incurred. That is borrowing cost. So what are borrowing costs? Borrowing costs are nothing but effective rate of interest. That is interest expenditure. That is you using effective rate of interest. Yeah. What is effective rate of interest? In the effective rate of interest, obviously interest expenditure will be there. Ancillary cost to borrow it, not for what? Not for the cancellation of the loan. It is for getting the loan. Okay. At the same time, any discounts, any ancillary cost in the sense processing costs or issue expenses. Suppose if it is a debenture issue expenses, premium and redemption of debentures, discount and issue of debentures, all those costs are going to be borrowing costs. Done. Right. At the same time, right. Next, when are we right? Next cost is what? If it is a borrowing cost directly related to a lease accounting. Okay, because you are getting the some asset is in lease and which is taking a longer period of time, that is to incorporate in. You took some asset on lease and it is going to be part and parcel of say one plant and machinery. That execution of that plant and machinery is going to take place a year or more. Then that interest expenditure under the lease liability under this is linked to Ind AS 116, obviously. And not only that, and the last point is going to be the foreign exchange fluctuation loss. Correct? Now, foreign exchange fluctuation loss on the foreign currency borrowing, which is directly, to the extent it is regarded as borrowing cost. In one company very recently, we have done the same. There is a big plant. There is some loan borrowings from the foreign company, their parent company. So in this ECB, okay. Obviously, there is a lot of foreign fluctuation loss is there. So because of the foreign fluctuation loss, and this loan is being utilized for the purpose of construction of a plant. So that we have bifurcated that foreign exchange fluctuation loss to some extent is going to be capitalized as a borrowing cost. Remaining has been charged to profit and loss as a foreign exchange loss only. Yes. So that is also an important point. Correct. So next one, when are we going to, when do you capitalize it? You will be capitalizing if the borrowing costs are, if the borrowing costs are directly, if the borrowing costs are directly related to a qualifying asset. That is for the construction of the qualifying asset or for production of qualifying asset or for acquisition of qualifying asset. What is a qualifying asset? Which takes necessarily a longer period of time, substantial period of time. What is substantial period of time? 12 months or more is going to be considered as substantial period of time. Okay, yeah, substantial period of time to make it ready for its intended use or sale, right? So when do you start capitalization? So here timing and the next one is amount is important. When are you going to capitalize it? See, we are going to capitalize, there is a starting point, there is a suspension and there is a cessation. When do you start? You must be started incurring the borrowing cost. You must be started incurring on the qualifying asset, and there should be activity should be in progress. It's not like that I started something and there's a big gap and again I'm starting. No, the activity should be in progress. Activity should include physical activity. Activity includes something technical, administration, which are very much necessary for the qualifying asset, for the capitalization of qualifying asset. Okay, then yes, and if you satisfy all the three conditions, then you should start capitalization. And when do you suspend? When the activities are not in progress, then you are supposed to suspend it. So suspension means during this period, whatever the borrowing cost you have incurred, that is going to be charged to profit and loss statement. It is suspension of capitalization. So during this period, borrowing cost is going to be done. But even this suspension time, if the suspension, if there is a temporary delay, if there is some technical administration activity which is very much important for this qualifying asset, then will not suspend the capitalization. And what about the cessation? My dear, cessation means stop. Okay, stopping in the sense, when do you stop? When the substantially that qualifying asset is ready for its intended use or sale, then you are going to stop capitalization. Right. So that means from that date onwards, whatever the borrowing cost have been incurred, That's all going to be charged to profit and loss under the head finance cost. Okay, next, how much amount is supposed to be capitalized? This depends upon what the type of loan. Is it a specific loan or is it a general borrowing? Okay, specific borrowing, general borrowing. If it is a specific borrowing, is whatever the interest cost incurred minus whatever the interest income you have received. Correct. Now, suppose if you take some borrowing for the purpose of say construction of a plant and machinery, that money cannot be used. You cannot go to share market and purchase some shares and play with it. No, it can be maximum. Suppose you don't need that money right now, you can give it in some fixed deposit or something. That interest will be there. Yes, that interest income is supposed to be reduced. If it is a general borrowing, then what are we supposed to do? You are supposed to calculate the weighted average weighted average rate of borrowing. You are supposed to calculate. That means total amount of interest what you have incurred divided by weighted average of the borrowings. Basically, weighted average of the borrowings means, I mean, how many number of months, yeah, I mean total amount of loan into number of months it was outstanding divided by 12 you are supposed to apply. There is adjusted borrowings total you should take into 100. If you apply, then you will get the weighted average, or the average rate of weighted average rate of borrowing cost. That rate is supposed to be taken for the capitalization purpose. Next, after capitalization of borrowing cost, my dear, after capitalization of borrowing cost, the total qualifying asset value should not be more than the recoverable. If it is more than recoverable, then immediately in days 36, that is the impairment of assets, is going to be applicable. You just need to cut off that part. Exactly. Okay, right. So this is a quick revision. Yes, obviously we have not considered 100%, but yes, this much is sufficient to handle the MCQs. If there is some other points are going to come, yes, obviously we are there to handle the same thing. Okay, right. So let's look at the Index 23. Yeah. So what is there in Index 23? First point, my dear. Yeah, in determining the borrowing cost, correct. Now, in determining the borrowing, right, in determining the borrowing cost to be capitalized, the amount of expenditure on the qualifying asset are not reduced by, see, what is it not reduced by? Look at these 4 points, my dear. Yeah, decide A, B, C, D. Yeah, what does it say? First, progress payments received. We're not going to progress payment received is nothing to do with respect to that. Correct. Now, grants received in connection with the asset. Grants received, that is government grant accounting, my dear, that is not from the borrowing cost. That can be reduced. That is as per the Ind AS 20, that is in the previous class, whatever we discussed. Income on the temporary investment of the specific borrowing. Correct. Now, income on the temporary investment. This is what I told you. Correct. If you don't need the money right now, obviously you must have deposited some fixed. I mean FD you must have made. In that, from the FD you must be getting some interest income. That interest income is supposed to be correct. Na? You are supposed to reduce it. This is the one, not both A and B. This is nothing to do with this point. Okay, na? Right. So second bit, when will the specific borrowing to be considered as general borrowing? See, when will the specific borrowing to be considered as general borrowing, my dear? Right. This is the, yeah. So when will the specific borrowing to be considered as general borrowing? Right. This is the amendment actually. Okay. What is the amendment? The new, I mean, amendment. What does it says? Suppose I have taken some specific borrowing for, yeah, I'll say I'm constructing say I'm constructing a building. Okay, I am constructing a building. Yeah, for this purpose I have taken some specific borrowing is available. How much is the money? Let us say some 100 crore rupees I have taken. Okay, so now this building got constructed. Yes, when is it completed? That is 31st March 2023. Building got constructed. But still, do you have loan? Yes, yes, I have some loan. Loan must have become maybe 80 crore rupees, 60 crore rupees, something it must have become. So this loan, correct, since qualifying asset is already ready, correct, qualifying asset ready. Now, suppose there is, we are constructing another plant and machinery. Now, from 1/4/2024 onwards, 1/4/2023 onwards, 1/4/2023 onwards, this 80 crore rupees loan is going to be treated as general borrowing. That is what the new amendment. Okay, yes, read through this point, my dear. What is there? When will the specific borrowing be considered as a general borrowing? Okay, when substantially all the activities of the necessary proper prepared in the qualifying asset Correct. Now, for which specific borrowing was taken for its intended use or sale is complete. Okay. When activity is necessary to prepare the qualifying asset for the, for which specific borrowings was taken for the intended use or sale has been started. Activity is necessary has started, not started. That qualifying asset should be ready. Correct. Now, when substantially all the activity necessary to prepare the qualifying asset for the intended nearer to complete, not near to complete, which is complete. Specific borrowings are never considered are going to be. No, this is an amendment. D is without doubt. It is not correct. Correct. Na? So obviously, which one is told, my dear? When the qualifying asset is ready, ready in the sense here complete, not near to complete, not something is to complete. So that's why A is 100% right answer. Next, in determining the borrowing cost to be capitalized, the amount of expenditure, correct na? The amount of expenditure on the qualifying asset, on a qualifying asset, okay, includes on a qualifying asset, right? On a qualifying asset include only those expenditure that have been resulted in. Tell me, borrowing cost. It may be payment of cash. It may be transfer of other assets, or the assumption of interest bearing liabilities. Think, answer, right? Yeah. See, it is going to be payment. See, first read the question once again. I think you're answering not correct. In determining the borrowing cost to be capitalized, the amount of expenditure on a qualifying asset includes only those expenditure that have resulted in. Correct, na? Yeah. So what is that kind of? You are spending the money on the qualifying asset. This is not like what. How are you incurring the borrowing cost? How much money are you spending on the qualifying asset? Yeah, to purchase the qualifying asset, you may buy. Correct. A transfer of other asset. That means you must be purchasing using the barter system, something like that. Assumption of interest bearing liabilities. Correct. You are spending. You are taking the loan. Okay, you're taking the loan. For that you are paying the interest and etc. Yes, yes, my dear, it is obviously going to be all of the above. whatever the way whatever the way, by taking the loan you are purchasing the asset, or by paying the cash you are purchasing the asset, or by giving the barter system exchanging the assets also. Yes, it's all whatever the way you are purchasing the asset, it doesn't matter. Correct. Now, qualifying asset can be arising from any of these. Done. Yes. Which of the next fourth bit, which of the following is not a qualifying asset? Financial asset is not a qualifying asset, obviously. Correct. Now, investment property is a building which may take good amount of time. Bearer plant, yes, without doubt, yes, it is. Correct. Now, intangible, what is that? Intangible plants. What is intangible plants? It must be intangible assets or something, my dear. Okay. Yeah, intangible assets here. Yes, intangible asset also can be a qualifying asset. Right. Financial asset obviously cannot be a qualifying asset. Next. Which of the following would be considered as borrowing cost to be capitalized? Yes, please. Which of the following would be considered as a borrowing cost that is going to be capitalized? Interest on working capital? Yes, it can be. Interest on borrowings? Yes, yes, my dear. Interest on working capital also can be correct under general borrowing, not obviously specific borrowing. Interest on the borrowings used for the manufacturing inventories on large quantities on repetitive basis. No, if it is for the repetitive basis, then it is not obviously. Interest on borrowing utilized to acquire biological assets, right? Which is up to acquire the biological asset, which is measured at fair value. No, if something is already measured at fair market value, na, then why to add cap fair? Why to see on the balance sheet date? What is the number it is coming in the balance sheet date, my dear? Fair value. Correct. Now, fair value, when any asset is already measured at fair market value, obviously it does not include the, you don't need to capitalize such for that asset. Borrowing cost need not be capitalized. Okay, right. Dividend paid on, so that's why it is not correct. So dividend paid on the redeemable preference shares. Redeemable preference shares used to fund the development of a qualifying asset. See, it is redeemable preference. I think it is. See, first of all, question is what? If you say redeemable preference share capital, no, it is going to be classified as what? It is going to be classified as financial liability. If it is a financial liability, you getting my point? If it is a financial liability, whatever the dividend name you call it, you may call it as name dividend, but it is obviously a borrowing cost. It is obviously a borrowing cost. Okay, right. So what is the ICAI has given? ICAI has given which of the would be the cost of capitalized. Actually interest on the working capital also is going to be capitalized, and since this is also borrowing cost, this is borrowing cost. Yes. Yeah. So now the question is, just a second. Yeah. Huh. See, now in this question, the fifth question, what I am trying to tell you. In the fifth question, which of the following should be considered as borrowing cost? Interest on working capital? Yes. Interest on working capital, I mean overdraft or something. I mean working capital means if you prove that this has been utilized only for the purpose of, but generally it is going to be part and parcel of borrowing cost. That is also borrowing cost actually. Yeah. So here there is a small conflict. Okay, A and D both are coming as, both are going to be, both are eligible to be eligible to be borrowing cost. Yeah, but the ICA suggested answer they have given only D. ICA suggested answer is given D. Okay, but actually this is also correct answer. Right? Just information. Interest on working capital also is obviously considered as borrowing cost only. Next, what is the capitalization rate? Hmm. Yes, Priyadarshini, what is the capitalization rate? Yeah, the weighted average of the borrowing, correct? Weighted average. Why this is coming like this? Just a second. Yeah, now it's clear. The capitalization rate. What is the capitalization rate? Capitalization rate is nothing but weighted average capitalization rate. Correct, na? So weighted average borrowing rate applicable to the all general borrowings of the entity that are outstanding during the period. Yes, perfectly all right. Weighted average of the borrowing applicable to the general and specific. No, weighted average capitalization rate is nothing but weighted average rate. Weighted average rate is applicable only for the general borrowings. It is never applicable to the specific borrowing. So B is not correct. Weighted average of the borrowing cost applicable to all the specific borrowings only. 100% wrong. Weighted average of the borrowing cost applicable to the those general borrowings of the entity only that are used during the period for the construction, nothing doing, which were outstanding during the period. Correct, na? Which were outstanding during the period. So only A bit is correct answer. These are all like it includes general and specific. No way general and specific. It is going to be only general borrowing. And the next one is specific borrowing. So obviously this is wrong. This is wrong. All these things are wrong. Right. So chal, let's go to the seventh one. Borrowing costs do not include. Yes, try my dear. Which do not include A, B, C, D. Interest expense calculated using effective rate of interest as described in the Ind AS 109 perfectly. That is what I told you already. This is correct answer. But he is asking which do not include. So obviously in the given circumstance, this includes. That's why this is not right answer. Next, interest in respect of lease liabilities. Yes, I told you that is linked to Ind AS 116. I told you some lease asset you are taking. That is going to be part and parcel of a big plant and machinery which is under installation or which will take to start using. It will take some say 1 year or something. Lease asset is ready, but that cannot be used independently. That asset is going to be part and parcel of a big plant and machinery. A big plant and machinery is going to take a huge amount of time, so 2 3 years of time. Then yes, you are supposed to consider that. Exchange difference arising from the foreign currency borrowing to the extent regarded as, yes, it is also borrowing cost. Then obviously what is left is D only. Interest expense on the own finance resources. No, my dear, these are all, what is it called, my dear? Opportunity cost. Correct, na? Imputed cost, people call these words. So this cannot be capitalized. That means he's asking interest that should do not. Correct, na? So the interest expenditure on own finance do not include the borrowing cost. That's why that is the right answer. Next, in case of specific borrowing, the borrowing costs are capitalized. Correct, na? The borrowing cost is capitalized. Tell me what do you capitalized? Is it only to the extent what you have, to the extent of the borrowing that are utilized for the construction of the qualifying asset, to the extent of the expenditure incurred on the qualifying asset, and the total amount of specific borrowing for the commencement date minus lesser income on temporary investment. Correct, na? Yeah. So obviously this is correct. It is not like how much I utilized or not. What is the borrowing cost? Correct. Now what is the borrow? How much you spent? Sir, I spent 1,000 rupees. Minus sir, some FD income I got. How much you got? 200 rupees I got it. Why? I have got some idle funds. That money I have kept it in the FD. Correct. Na? So 200 rupees cut. So that is going to be 800 rupees. 800 rupees is the borrowing cost. That should be capitalized with the qualifying asset. That's it. So ninth bit. Chalo. What will be the treatment for the exchange difference? Resulted in unrealized gain. See, unrealized gain has come. While capitalizing the borrowing cost on the foreign currency borrowing taken for the construction of a qualifying asset. See, first point is it a gain or loss? No, it is not a loss. See, if it is a loss, if it is a loss, that is cost. What you lost is cost. If it is a gain, unrealized gain, then it is not a correct. But remember, keep it in mind. Suppose in the last year, sir, last year there was like previous year. Last year there was say, sir, 1,000 rupees. 1,000 rupees there is a forex loss, sir. Excellent. But if 1,000 rupees forex loss, sir, we have already capitalized, sir. Okay, you have already capitalized. Okay, but in the current year we have got 800 rupees forex gain. You got it, sir. So now e 800 rupees. Since last year when you have got the last, no, you capitalized it to the extent of 1,000 rupees. If you get within the completion of the foreign exchange, within the completion of a qualifying asset, if you get any gain, that should be adjusted to the qualified asset. Otherwise, that is supposed to be charged to profit and loss. It should be taken to profit and loss. This is the concept. Hope you got it. Like read the answers. What will be the reasonable point here? Ninth bit. Yeah. So it would not be adjusted to the interest, even if there was an adjustment to the interest in the previous year on account of the loss. No, it is obviously not correct. I told you just now. I told if you had got loss in the previous year, and if you get current year gain, that is supposed to be adjusted to the extent of 1,000 you capitalized in the past. Na, that 1,000 only can be taken back. Okay, right. So next, it would be adjusted to the interest to the extent of adjustment, to interest in the previous year on account of unrealized exchange loss on settlement of translation of the same borrowing. This makes sense. Okay, yes, this is perfectly all right. Next, we will read C also, D also. It will be adjusted to the interest irrespective of the fact whether there was an adjustment to the illogical. So gain is not a cost. Correct. Now cost is what I told simple language which is lost. This is not lost. This is a gain. Gain can never be a cost. So this he said nothing doing will adjust it. Are boss? If you had already lost in the past, that was capitalized earlier. Now in the next year on the same borrowing you got a gain. Then you please adjust it. Adjust in the sense earlier loss ko you reduce it. I mean your total qualifying asset number will come down. Okay, capitalization will come down. Next, it will be adjusted to the interest fully only if there was an adjustment to the interest in the previous year on account of unrealized exchange loss. It is not fully, my dear. Correct na? Which bit this is ninth. It is not fully going to be. Why do you fully account it? Correct na? Say example. I'll give you this is situation number one. Situation number two. Okay, sir, previous year how much loss you got it? Sir, previous year forex loss is equal to 1,000. Okay, current year what is the gain? What is the foreign exchange fluctuation gain you got? Sir, 1,500 I got it. Why will I adjust fully? Correct now. To the extent I have capitalized, this is what capitalized in the past. So what are you supposed to do? Out of 1,500 rupees, correct now, what are you supposed to do? You should pass a journal entry. Loan you got a gain means what? Loan amount is reducing. Correct now. So that means obviously what should have been forex loan account debit. Correct now, forex loan account debit 1,500 rupees to a qualifying asset. Qualifying asset to the extent of 1,000 you are supposed to reduce it. So then forex gain, that is going to be profit and loss, 500 rupees is going to be transferred. Got it? Exactly. Now 10th bit. Chalo my dear, 10th bit. Let's have a look at 10th bit. So big question. Aditi Labs. are planning to expand their business and open two or more branches in the vicinity of the two new hospitals being built in the area. The enterprise issuing funds from the general borrowings for the expansion of this project. Then, the finance director of the company has briefly read about the capitalization of the interest paid on the borrowings. He has sought your clarification on this matter. If this entity can capitalize interest of 10%, which is the highest interest rate of all the borrowings they have made during the year, which of the following are correct? So he's taking, I mean, they have taken 1, 2, 3, 4 general borrowings. Out of the highest rate is equal to 10%, and he's saying at the rate of 10%, I'll do it. Is it 10% highest rate? It is obviously not highest rate. It is going to be weighted average borrowing rate. That is what you are supposed to take it. So obviously is not correct. You pick out of 1, 2, 3, 4, which is weighted average borrowing rate. That will be the right answer. Pick, my dear. Finance director is right. This is wrong. Correct? No, obviously wrong. Capitalization rate, that should be weighted average of the all the borrowings applicable to the borrowings of the enterprise that were outstanding during the period. This is perfectly correct sentence. Interest paid on the general borrowing in accordance with the ICDS. Why Income Tax Department Act comes into picture? Entity should use the lowest interest rate of all. Why lowest? Because he told highest, though you are telling lowest. It is nothing lowest or highest, my dear. It is going to be weighted average borrowing rate. 11th bit. In days 23, borrowing cost is not required to apply on. You don't need to apply on what? I told you. On the fair value things, you are not supposed to apply. Mass production, which is going to be happening on repetitive basis, no, you are not going to do it. Correct now? Yeah. So made to order inventory on a repetitive basis. That is also, this is also, I'm sorry, 1 second. Made to order qualifying asset which are measured, obviously no. Correct na? Right. Which are not required to apply. Not required. Sorry, I didn't read carefully. Yes, which is not required to apply. Yes, on this you are not supposed to apply. Correct. On this also you don't need to apply. Made to order inventory on a repetitive basis. No, inventory, if it is in inventory, obviously it will be happening inventory basis, repetitive basis. This, okay. So next point is what? A and B. Yes. See, because my points are A and B both are correct. Yes, on these items, borrowing cost is not supposed to be done. Okay, because you are already measuring at fair market value. When your asset is getting, I mean, measured at fair market value, what is the point of borrowing cost increasing or decreasing? Even today, if you increase, correct na, I will say simple concept, 1,000 rupees, sir. Okay, after 1,000 rupees, you will say this is my cost. Okay, sir, now borrowing cost is equal to 400 rupees. You have made it to 1,400. But immediately at the end of the balance sheet date, what do you see? We will check FMV. Fair market value is equal to how much? 1,200. 1,200 is the, what do I do? Then minus 200, I'll cut it, no? Obviously. No, I don't do this. I don't do this under that circumstance also. Say example 1,000. What is fair market value? 1,200. Then what do? We'll add 200 and on the balance sheet date we'll bring it to 1,200 exactly. Correct. So increasing, decreasing the asset, borrowing cost is going meant for what? Capitalization. That's why if the asset itself is qualified, I mean it itself is measured at the fair market value, then this concept does not work exactly. Okay, next point. Qualifying asset is an asset that is necessarily taking a substantial period of time. Correct? Now, they never tell 12 months or 13 months. Not operating cycle. Any one of the above is wrong, obviously. Which is taking substantial period of time. That is the right answer, which you obviously very well know. Correct. 13. In accordance with Ind AS 23, borrowing costs that do not include, you word say do not, that is only important. Which do not include this. This is a repetitive question, my dear. Okay. Yeah, this is repetitive. We already discussed. How shall the entity recognize the eligible borrowing costs that are directly attributable to the acquisition or construction or production of a qualifying asset? What are we supposed to do? Eligible borrowing costs. How shall an entity recognize the eligible borrowing costs that are directly attributable to the acquisition? Correct. Now, how do you record it? Do you record as an equity? No. Do you record as an asset? Yes. Do you record as an expenditure? No. We'll capitalize it to the qualifying asset. So that means asset. It is a liability. No, it is not a liability. That's it. Yes. Read the 15th one, my dear. Hmm. Yeah. What is that? What is the correct treatment of borrowing costs other than the eligible costs on the qualifying assets under Ind AS 23? Hmm. What should I do? What is the correct treatment of borrowing cost other than the eligible cost qualifying asset? If it is not eligible, what are you supposed to do? You are supposed to charge off. Correct, na? If it is not a qualifying asset, it is not eligible. Obviously, you will be charging it off. That's all. Correct, na? Exactly. Right. Borrowing costs eligible for the capitalization in case of a specific borrowed fund shall be. This also we discussed already. This is a repetitive question. In this, I have not eliminated the repetitive question, so you have to bear with me. Okay, whatever the cost incurred, if it is a specific borrowing, whatever the cost incurred, that is correct, minus FD interest we spoke, correct na? So FD interest obviously is going to be reduced. That is nothing but the actual borrowing cost incurred minus investment income on the temporary investment. This is, I already told, this is discussed. Which of the following is not a condition for commencement of capitalization? See, commencement of capitalization, in the summary I have explained. What is that I have explained? Three conditions you are supposed to satisfy. You should have, started incurring on the qualifying asset, started incurring the borrowing cost, and activity should be in progress. That's all. When you satisfy all the three conditions, then you are supposed to write. So, right. Tell me now which is not a condition they told. Answer me. Repayment of borrowing has commenced. Why repayment is relevant? Repayment is irrelevant. Rest of the things are correct actually. You should be incurring the expenditure on the asset, incurring the borrowing cost, and activity should be in progress, which are necessary for the intended purpose. Exactly. So 18th bit. Now, how to treat the borrowing cost incurred during the extended period, okay, in which the entity suspends active development of a qualifying asset. See, what is it telling? Borrowing cost incurred during the extended period in which the entity suspended the active development. Active, there is no activities going on in this period. Whatever the borrowing cost incurred in this period, what should I do? Shall I capitalize? Shall I charge? Shall I charge to statement of changes in equity? God only knows why they correct. No? It's okay. Nothing to be done. What should I do? It is during the suspension time. Correct na? Suspension time what I taught you? It should be charged to correct na? This is the right answer. Not cross. Correct na? What are you supposed to do? Charge it off. It is not eligible to be capitalized. Correct. Now once again the activity started, then yes, please go ahead. You capitalize it. Which of the following is not required to disclose, not to be disclosed in accordance with Ind AS 23? Yes, disclosure related point, my dear. Tell me. Amount of borrowing cost capital you have to give. Currently, he is asking which is not required. Capitalization rate that is determined the amount of borrowing eligible for capitalization. Yes, you have to give. Okay, amount repaid in the respect of the amount repaid in the respect of the borrowing cost. Correct, na? Yes, this is not correct. Amount repayment is nothing to do with the borrowing cost calculation. That's why this is, not correct in the sense, this is only correct answer. This is not required to be given. Balance everything is supposed to be given. So since I have got C correct answer, then obviously none of the above is also wrong answer. Okay, right. How much is the borrowing cost you have incurred? What if you are using the capitalization rate? What is the rate you are at which you are capitalizing? Other information is mandatorily to be given. Right. Look at the 20th sum, my dear. On the 1st January 2022, GG Limited borrowed 5 million at an interest rate of 12% per annum. Okay, at the 5 million rupees at the rate of 12% per annum to finance the cost of construction of the factory building. Construction commenced on 1st January 2022 commenced. Cost 5 million. Not all the cash borrowed was utilized immediately. So interest amount of 75,000 was generated by temporary investment funds. Yeah, simple question. Correct. Now the project was completed on 31st October 2022. That means how many months, my dear? October means November, December. That means 10 months it has taken. You can still consider it as a substantial period of time. Okay, so now what are you supposed to do? How much are you supposed, correct now? What is the carrying amount of the building? What is the carrying amount of building? First 5 million is the cost. Original cost. 5 million means how much, my dear? 50 lakh rupees. Yeah, 50 lakh rupees plus how much is the cost you have incurred? 550 lakh into 12 percentage, how much? 12 percentage into 10 months only. Yeah, use your calculator. Let me also take my calculator. I don't know where is it. Yeah. So, what are you supposed to do? 50 lakh into 12 percentage divided by 12 into 10. Yeah, it will come to how much? 5 lakh rupees it will come. Correct now. But out of 5 lakh rupees, what are you supposed to do? The income should be 75,000 rupees. You are supposed to reduce it. Correct now. So minus 75,000, if you reduce it, that will come to 4 lakh 25,000 it will come. So 50 lakh plus 4 lakh 25, that is equal to 54 lakh 25,000 rupees is going to be your right answer. Correct na? Right. Exactly. So next 21 is bit. DG Limited. Yeah. So tell me, DG, just go through the question. DG Limited is commencing a new construction project, which is to be financed by the borrowing. According to Ind AS 123, from which the following dates the company can commence the capitalization of borrowing cost. Okay, yes. Which one, my dear? From which date it can start? I think he has not given the full information, no? Okay, loan interest rate for the project started. 29th loan interest rate is started, it seems. Okay, loan interest rate started is not the important point. Okay, 8th June technical site planning commenced. Yes, so you should be incurring the interest and you should be incurring the, activity should also be progress. Expenditure on the project started to be incurred. Construction work started. Construction physical activity is not necessary. Some expenditure is supposed to be incurred. So by 21st June, what is happening? You started paying the interest amount and your technical side planning means some activities already started progress and you started spending on the asset actually. So that's why, so by this date all the three conditions have been satisfied. So that's why this should be the date for starting the capitalization. Okay, right, chalo. Let's go to 22nd sum. On 1st April 2021, B Limited obtained a loan from the bank. Okay, for 50 lakh rupees. It is to be utilized under the construction for the construction of plant. Okay, for construction of plant 20 lakh. For construction of plant. Plant is a qualifying asset or not? Yes. Purchase of a machinery. See, purchase of a machine, purchasing will it take 12 months time? Not exactly. Correct. Unless until he mentions very clearly. That's why this is not a qualifying asset. Working capital, it is not a qualifying asset. That is correct. Na? Advance for the purchase of the truck. Truck is a ready-made item. Correct. Na? Just because not we will give advance, then only they'll start making. No, my dear. This also cannot be. So there is only one item. Correct. Na? How much have you utilized? 50 lakh rupees utilized. Out of 50 lakh rupees, only 20 lakh is going to be related to qualifying asset. Okay. By end of the March 22, construction of the plant was completed. That means 12 months it took. Machinery was installed. Delivery of the truck was not received. Okay. Total interest charged by the bank is on 31st March ending is equal to 9 lakh rupees. How much interest will be charged to the statement of profit and loss? He is asking how much will be not capitalized, how much will be charged. What should I do? Very simple. 9 lakh rupees into 20 divided by 50. Correct. Now that is equal to 9 lakh into 2 divided by 5 if I take. That means 3.6 you are supposed to capitalize it. Yes. Out of 9 lakh rupees, what is he asking? Charge to P&L. So 9 lakh minus 9 if I do, that means 5.4 lakh rupees is supposed to be charged to profit and loss. Correct. Na? Yes. That's all. So 5.4 lakh rupees is given in A. So A is the right answer. Okay. Yes. Next. So 23rd bit. Yes. 23rd bit. Which of the following cost should be treated as borrowing cost in accordance with Ind AS 23? Yes, my dear. Which of the following cost should be treated as borrowing cost in accordance with Ind AS 23? Dividend paid on the preference shares considered as equity. Read the line carefully. They have classified as equity. Once preference share capital is classified as equity, then it should be reduced from the retained earnings. It is not supposed to be. It is not a borrowing cost. So this is not going to be borrowing cost. Dividend paid on the redeemable preference shares. See, they said redeemable preference shares. Redeemable preference shares are nothing but financial liability. My first class only I told. We don't go by the nomenclature. We'll go by the substance over form. Redeemable preference shares is, maybe you are calling as preference shares, but it is redeemable, it is repayable. That means it is going to be a liability. That is nothing but a financial liability under Ind AS 109. So whatever name you call, you will call dividend, you call, will call interest, but end of the day we will say it is a finance cost. Yes, this is going to be treated as a finance cost. Interest on the decommissioning obligation. Decommissioning obligation is separate. Why? That is borrowing cost, it will come. Nothing is going to come. The dividend paid on the equity shares on the process of this equity shares you told, it will never come. So my 23-bit answer is B, perfectly all right. Yes, good question. Right. 24. What is the treatment of the borrowing cost in accordance with Ind AS 23 when an entity applies Ind AS 29 financial reporting on hyperinflationary economies? Even I also don't know. I also never read Ind AS 29 because it's not applicable to the country. We are not in a hyperinflationary economy. Okay, right. Anyhow, let's read the full line once again and we'll answer. What is the treatment of borrowing cost in accordance with Ind AS 23 where an entity applies Ind AS 29? Okay, yes. So what will happen? Entire borrowing cost needs to be capitalized? Not like that. Borrowing cost to the extent of inflation shall not be capitalized. Yes, this makes sense. This is the right answer. B bit. Okay, borrowing because you're already into hyperinflationary economy. Hyperinflationary means the country's inflation right now maybe 5 to 6%. Hyperinflationary countries will are there where it will be like 50% up. Today this calculator is equal to 100. Next 1 year 150. It may be 300% up. Means today it is, you understood my point. This is 100 today. Next year it's going to be 300 rupees. That is hyperinflation. Our country is not into that. Okay, so borrowing cost if I am paying because of the hyperinflation, inflation fluctuation impact, that should not be capitalized. That should be charged to P&L. That's all is the point. But anyhow, that is also a new standard. I mean, I read it long ago. Very lightly I remember. Okay, right. 25th. And again, that such standards, no, 29 and all, where do you apply? I obviously in a lifetime I may not be able to apply that. Yes, an entity receives an interest-free loan from the government for construction of the qualifying asset. You got interest-free loan. Agreed. What is the correct treatment in this case? Tell me, madam, what is the correct treatment in this case? Read through all 4 bits. Entity receives interest-free loan from the government for the construction of a qualifying asset. Agreed. So effective rate of interest under Ind AS 109 is supposed to be capitalized. Expenditure are reduced from the grants received. Why? Okay, both A and B, none of the above. What do you say? None of the above is wrong, no doubt. Okay, yeah, think. See, I'll tell you. I mean, if you guys have already completed Ind AS 109, then it is easy for you. Otherwise, it is going to be difficult. Listen, suppose you have got a loan. How much loan you have got? Say 1 lakh rupees is the amount of loan. How much is the rate of interest? Interest free, 0%. But have you taken a loan? Yes. Loan taken is nothing but a financial liability? Yes. So what are you supposed to do? What are we supposed to do, my dear? Initially, you are supposed to record it at fair market value. Fair market value says some number, just simply some number. I am putting 60,000 rupees is the number. But are you supposed to repay this after 3 years or 4 years? Yes, you are supposed to repay this. So every year what do you do? So now opening balance. Opening balance is equal to how much? 60,000 rupees. Agree? Correct. And correct. This because loan amount you brought it. Tell me, my dear, what are you supposed to do? What is the journal entry for this recognition? Sir, day one I have received cash. How much is the amount? Amount is equal to 1 lakh from the government. So okay, what is the loan you are supposed to do? Loan, I told you, in days 109 is applicable. That is nothing but at fair market value. Fair market value is equal to 60,000. So loan will be recorded 60,000. Okay, two. That's all. No. What is the difference? This difference is nothing but 40,000 rupees is a government grant. Okay. So what do you do with this? What do you do with this? This your government. Whenever I say government grant, then immediately you are supposed to refer in days 20. Okay. In days 20 में क्या बोल रहा है? If is it a specific? Isn't it a government grant you got related to specific asset? Yes. So you have got two choice. What is the two choice? You can deduct it. Correct na? You can deduct it from where? You can deduct it from the prospective PPE, or you can show it as a deferred government grant and amortize it to profit and loss in the ratio of the depreciation. We have discussed it. So if 40,000 rupees, if the company has taken a accounting policy choice of deducting from the property, plant and equipment, yes, reducing 40,000 rupees is correct. So that's all, not that's all. Hold on. And again, so sir, it is a qualifying asset. Yes. Is it taking 3 years of time? Yes, it is taking 3 years of time. Now, that's what are you supposed to do? Since it is a loan, 60,000, but are you supposed to pay at the end of the fifth year or whatever fourth year you are supposed to pay 1 lakh or not? Yes. So that's why 60,000 rupees will be unwinded, means you will be increasing it to 1 lakh rupees. Using which rate? At what rate you discounted? Same rate you are supposed to bring it up. So what are you supposed to do? Now interest rate. So let us say if it is a 10 percentage is the interest rate. Example I am saying. Okay, then what will happen is 6,000 rupees will be interest expenditure. Interest expenditure is nothing but a finance cost here. Yes. So E6000, since the qualifying asset is also taking some number of years, so E6000 is also going to be capitalized. Correct? Now, based on this explanation, now look at this. Effective rate of interest of the financial shall be capitalized. Yes, that is what 6,000 rupees. This is what I am talking. 6,000 rupees effective should be capitalized. Correct, no doubt. Expenditures are reduced by the grant received. Yes, there is a government grant of 40,000 rupees. That is total amount of qualifying asset will come down by 40,000 rupees. Yes, that is perfect answer. Both A and B, yes. So this is the right answer. Obviously, I told you none of the above is wrong answer. Okay, exactly. Right. So next bit, 26th bit. Hmm. An entity has no borrowings set aside in cash that is equal to 50 crore rupees generated from the interest accrued of the business to finance the construction of the property, plant and equipment. Okay, we don't have any borrowings. Okay, we have got set aside already. We had excess money of 50 crore rupees generated from the, I mean, my business I have done, whatever it is, that cash being used to finance the construction could otherwise have been earned 4 crore rupees. See, 50 crore rupees, if I had given it to somewhere, no, if I had financed somewhere, I mean, if I invested somewhere, I would have got 4 crore rupees of money. This am I losing? You're losing by constructing one qualifying asset. So, 4 crore rupees, let me capitalize. That is what he is telling. Correct, na? Right. However, the company earned temporary interest income of 1 crore rupees during the construction period. Right. The management can capitalize the following interest cost. Tell me, my dear, how much I can capitalize? How much can I capitalize? Hmm? Is it a borrowing cost actually incurred? Hmm? No, not incurred. Isn't it opportunity cost or isn't it like your imputed cost? Imaginary cost basically. Agree, na? Right. So when you have not never incurred this, then how can you capitalize it? So obviously you can capitalize only zero. Nothing else can be capitalized. Which of the following outstanding borrowings are to be taken into account for calculating the capitalization? Loans taken to acquire subsidiary. No, you cannot take it. Okay, there is a specific purpose that is basically outstanding debentures. Yeah, loans taken to acquire subsidiary. Acquisition of subsidiary. That a subsidiary is not a qualifying asset, so general borrowing may it will come. Okay, right. Outstanding debentures, yes, Pakka will take it. Working capital funds, we do take it. We have to take it because borrowing includes everything basically. Correct? But loan taken to acquire the subsidiary, but this is subsidiary is not a qualifying asset, correct? No, subsidiary is not a qualifying asset. Yes, no problem. Then I can go with all of the above. How? How in the sense? Subsidiary is not a qualifying asset first. Correct, it can be. You have taken a loan to buy the subsidiary, but it is not a specific loan. I cannot call it as. If it is not a specific loan, then it is going to be general borrowing. You are supposed capital, because why general borrowing word came, sir? They use no word capitalization rate. Capitalization rate is nothing but weighted average of all the general borrowings outstanding during the period. That's why. Okay, so I have to go with all of the above. This is just to Jumma. I mean, simply they are trying to confuse you. Okay, otherwise matter is nothing. Okay, right. Yes, look at the 28th bit, my dear. During the COVID-19 pandemic, B Limited, which was constructing a plant since 1/4/2020, was not able to continue their construction activities in the development of this qualifying asset during this period. That is supposed to be suspended. What will be the appropriate treatment for the cost incurred in the form of interest or finance charges on the borrowing taken for the qualifying asset in the period in which the construction activities were stopped? I already told you. Correct, na? It is supposed to be charged to profit and loss. This is COVID is nothing going to add value to the asset. That has to be charged to P&L. Read through A, B, C, D and tell me which one is correct. Make sense? Charge to P&L. Where is it? Charge to P&L. Yes. Correct. Now, B bit you see, my dear. Yeah. B bit. What does it says? It should be suspended. Oh, so when I say suspended, it should be charged to P&L automatic during that extension period in which the activity development of the asset is suspended. Yes. So B bit is the right answer. Next, which of the following? 29. Which of the following is not a qualifying asset? Which we spoke already. Property, plant and equipment? Yes, it's going to be. Intangible? Yes. Inventory? Yes. Biological assets other than bearer plant? No. Why? Biological assets are going to be measured as per Ind AS 41. We say this is supposed to be measured at fair market value minus selling cost. So I spoke to you sometime before. Any asset which is going to be measured at fair market value minus fair market value, basically, no borrowing cost cannot be capitalized to those assets. That's all. Next, 30th bit. Borrowing costs are capitalized to the carrying amount of a qualifying asset till which of the following date? Till which of the capitalized to the carrying amount till which date, my dear? Date of ready to use, date of acquisition, date of put to use, date of achieving the commercial production capacity. Till which date will you capitalize the borrowing cost? Hmm? Ready to use is important generally, even during, I mean, when I review the financial statements, when I review the works of my or articles of team members, I mean, even accountants are always under the, I mean, confusion something like this. Ready to use is important, not put to use. Put to use not important at all for the depreciation purpose. Okay, for the qualifying asset purpose, even for depreciation should start from which date? Depreciation should start from ready to use. That's all. So here also, till the asset is, when the qualifying asset is ready to use, from then onwards you don't need to do anything. You don't need to capitalize it. From that date onwards, borrowing cost, whatever you have incurred, that should be charged to P&L. Next, okay, some HIJ limited something has borrowed a sum of $2,000 on 1/4/2020. Yeah, see, good question, my dear. Right, spot rate is equal to 70. Interest is equal to 4%. It was paid on 31st March 2021. Spot rate is equal to 75 rupees at the last date. Okay, so similar loan could be obtained from the 8% in India. Okay, is not given. Understood. Calculate the borrowing cost and forex loss or gain. See, this is what that related point. Yeah, I will try to use this space. How much loan have you taken? 2000 loan you took. Yeah, 2000 loan, correct? $2,000 loan you took. And how much is the interest rate, my dear? You have taken at 4%. Okay, so into 4%. So how much will come? 4 to 8. Correct na? So that is equal to 2000 into 4 percentage, that is equal to 80. Yes, 80. What is 80? 80 is going to be borrowing cost. Will you capitalize? Yes, we will capitalize it if it is used for the qualifying asset. Next, look at the bit, my dear. Yes. So if I had, right, what is the, again, rate is equal to what rate you took here? This is that day $1 is equal to 70 rupees. Right, on 31st March, $1 is equal to 75. It has become, correct na? It has become 75. Fine, not a problem. So now do you have a foreign exchange fluctuation loss? Yes, obviously there is a loss. So 2000 into 75 minus 70. Correct na? $2,000. Yes, my dear. Yeah, $2,000 into 5 rupees. That is equal to 10,000 rupees is a foreign exchange. Correct na? This is forex loss. Yeah, what should I do with the forex loss? Again. So this is interest rate na 80. 80 into what should I do? 80 into 75 also I should multiply. I forgot to multiply. 80 is the dollars. 80 into 75. 80 into 75 is equal to 66,000 rupees is the borrowing cost in rupees. Now, what is the total loss to you? 6,000 plus 16,000 is 16,000 rupees is the totally you have lost it. If I had borrowed the amount, how much amount of loan? How much amount of loan means if I had borrowed in India 2000 into 70 I would have borrowed. So 2000 into 70 if I take it, that will come to 1,40,000. If I had borrowed in India, I would have borrowed it for 8 percentage. So I would have paid 8% interest in the sense into 8 percentage I'll take it. Yes, I would have bond 11,200 would have been borrowing cost and 11,200 would have been capitalized. Agree? But right now, what is the cost I have incurred? 16,000. That's why to the extent of 11,200 should be borrowing cost and correct na? What is that? I should minus 16,000 if I do it. That is 4,800 rupees. To this extent, it is going to be forex loss. Right now, let me the question. What is he asking first? Calculate the borrowing cost and the forex loss or gain. Forex loss or gain. There is a borrowing cost is equal to 11,000, 11,200. 31st bit 11,200. Perfectly all right. Okay, right. Which you have discussed in the classroom obviously. 32. Calculate the borrowing cost and the forex loss in the above case if the spot rate is equal to 68 to a dollar. Okay, so instead of 70 if I take it 68. Okay, if instead of 70 if I take it 68, then 2000 into 68 will come first. Yeah, so e number 68 it will become. One second. Yeah, this will become 68. When that becomes 68, my number will be 1,36,000. 1,36,000 into 8 percentage if I do it, correct na? Not this number, this is going to become 10,880. Right, that's all, not that's all. Now 68 when I keep it here, so what is your loss? 2000 into 7 rupees is my loss. That means 14,000 rupees will come here. So my total will be 20,000 rupees. 20,000 rupees mein 20,000 rupees mein to what extent I could capitalize it? 10,880 I should capitalize it. Correct na? Yes. So 20,000 rupees minus 10,880 will be capitalized and 9,120 will become my forex loss. Yes, my dear. So what is that he is saying, my dear? Just a second. Yes, 68 to a dollar. If the spot rate, sorry, one second. 31st March 21, no, I took it different. I have calculated wrongly. Yeah, sorry, mistake. I have taken the spot rate is changed. No, what is that they are telling? They are telling the 68 is the year end rate. That's why my number was not appearing anywhere. Right, I'll do one second. Right, that's my mirror error. Let me correct it. I'll correct. Yeah, so 70 was correct. Yeah, 70 was correct. That is equal to $2,000. $2,000 into 70 is equal to 1,40,000 rupees is the loan. Correct. If I had borrowed in India, correct? If I had borrowed in India, 1 lakh, correct? Now, what will happen? If I had borrowed in India 1,40,000 into 8% only, I would have paid. If I had borrowed in India, yes, in India, 11,200 would have been my cost, borrowing cost basically. Yes, right. Now, what is the point here? 68 it became. Correct now. 70 became not 75, it has become 7. Correct now. Huh. So there is a gain or loss. There is a foreign exchange gain, no, first of all. Correct now. What is the foreign exchange gain? 2000 into 2 rupees foreign exchange gain. That is equal to 4,000. Then under the correct na. And what is your borrowing cost basically? My borrowing cost is equal to $2,000 into 4%, that is equal to 80 into that date rate is equal to 68. Correct na? So 80 into 68 closing rate, if I take it, 5,440 will become. If 5,440 will become borrowing cost at any cost. Okay, right. But forex gain, no, this is, it cannot be a cost. It cannot be cost. So what are you supposed to do, my dear? What is that? Borrowing cost is equal to 5,400. Forex gain is equal to 4,000. Yeah, spelling miss. I mean, yes, for 5,440. Correct answer. A is the right answer. Borrowing cost is going to be 5,440. Forex gain is 4,000 rupees. Exactly. Done. Right. 33 bit. Which of the following conditions should be satisfied to commence the capitalization? This is a repetitive question. JK Limited is undertaking construction of factory. Which of the following events will not trigger the capitalization of borrowing cost to the carrying amount of the factory? Tell me. Application of the environmental municipal permit. Okay. Which does not trigger. Which will not trigger. Next, acquisition of land. Acquisition of land is not exactly okay. Payment of advance to the contractor. Hiring the architects to decide the plant layout. Think and answer, please. Hmm? See, you have started the work, environmental activity, something. This is administration job. Okay. Payment to the contractor. This is also administration part. Hiring the architect. This is all technical and administration activities related. Acquisition of land. Land itself is land is not a qualifying asset, which I have discussed in the classroom. Land, what is that you are going to do? You are not going to correct unless until in the land development is required, sir. I purchase some hill only, sir. I have to make it flat and to make it ready for use of my flat. Otherwise, land is not at all. Acquisition of land does not trigger. Okay, does not trigger. And but this is one of the conditions. These 3 points, no, one of the conditions for starting the capitalization. Okay, one of the conditions for starting the capitalization. Yes, done. Next point. Look at the next bit, my dear. 35th bit. Yes. MNO Limited has decided to construct a new plant. Not a problem. The following events occurred. Right? Loan was approved and the first installment was withdrawn. First installment was withdrawn. Following events occurred. Right? What is the question actually? From which date should the capitalization of the borrowing should start? Think about it. Architect started working on the plant layout and it was paid in advance. Fine, 25th 6 I mean June started. Materials were purchased against the cash payment. Material for what? For incurring the qualifying asset. 10th July. Construction work started at the site on 18th August. Okay, yeah. So tell me, my dear, loan approved means what? You have started the, loan approved in the sense, and first installment you have it done. That means interest started from that day. Interest on the borrowing is incurred. Next, activities are in progress. Architect started. Correct na? Materials purchased means you started spending on the qualifying asset. Construction work started at the site. This is physical construction, but actually technical construction of architecture and already started. So that's why, my dear, which date are you supposed to do? You should start capitalization from 10/7. You don't need to wait. The physical activity should start. Activities include physical, technical, administration, everything. If any one is started, that itself is sufficient. Okay, right. 36th bit. Yeah, they have borrowed a sum of 20 lakh rupees financing excess funds, right? This is already discussed. Okay, yeah, kind of repetition. QRS Limited borrowed 5,000 rupees at 5% to finance the construction of a new building to be used for the retail outlet. At the end of the year, only interest for the 1 year was paid. Expenditure incurred on the construction during the year is equal to 18,000. Spot exchange rates at the time of availing the loan. Okay, this is again dollars. Correct, na? Yeah, okay, fine. That spot exchange rates at the payment of interest 45, 48 respectively. Similar loan if I had taken in India 10 percentage. Isn't it same kind? This is like same nature of question. That's why I'm not doing. RST Limited borrowed 20 lakh rupees at 5 percentage. Okay, per annum. Yeah, and repayable in single installment after 5 years to finance the construction of a new building to be used in a retail outlet. Loan origination fees of 2.5 lakh rupees was already paid. Okay, so processing fee something is there. Suggest the carrying amount of the loan that should be recorded and effective rate of interest when the market rate is equal to 8 percentage. Tell me, my dear, what should I do? Look at it carefully. RST Limited borrowed 20 lakh rupees, 5 percentage per annum. You're supposed to repay after the 5 years. Done. So, but you have paid. What is that? You have paid 2.4 rupees of origination fees. Your loan origination fees you have paid. That means how much money you have got exactly? Uh, how much money you have got exactly? We have got exactly 20 minus 2.4 is what you have received. Agree? Exactly. 20 minus 2.4 is the amount you have received. Yeah. So now what are we supposed to do? What is the loan amount? What is the loan amount you have? 20 minus 2.4 is nothing but 17.6. Correct. Next, suggest the carrying amount of the loan 17.6. That means BRC is the right answer. Suggest the carrying amount of the loan to be recorded and effective rate of interest. Yeah, actually here they gave market rate of interest is equal to 8 percentage. That is not the point actually. Market rate ko loan ko not at all relevant. You are supposed to calculate the IRR. That IRR is going to be your effective rate of interest. Okay, right. Here it may be IRR may be matching, but he cannot ask me to calculate that exactly. So I also don't have the time to do that calculation right now. IRR also comes to 8 percentage. That's why you are taking. Otherwise, market rate of interest, okay. One second. It has borrowed from whom? Construction of a new but if you have borrowed from the banker, no, market rate of interest you should take it. If it is, sorry, government, if you are taken from the government, market rate of interest should be taken. But from others, na, end of the day, how does it matter? What is the market rate? Why should I care about it? Correct, na? Right. So 5% is obviously not correct. And because I am, see, concept is very simple here. 20 lakh rupees into 5 percentage if you pay, fine, but have you received 20 lakh? No, you received 20 lakh minus 2.4 lakh rupees, that is 17.6 lakh rupees you received, but interest is paid on 20 lakh rupees. So your original interest rate is obviously higher. So 5% is can never be EIR, effective rate of interest, so it must be 8 percentage. Based on the given answers, 17.6, 17.6 is right answer. This is a coupon rate, this is not the effective rate. So that's why this is not correct. That's why I'm going with the 8 percentage concept. Okay, right. 39th bit. STU Limited borrowed 30 lakh rupees 10% as an repayable in a single installment of 5 years at the beginning. Okay, right. For a new building, expenditure on the construction during the year is equal to 7 lakh rupees you can spend. Construction was stopped for 2 months due to shortage of labor. Then those 2 months, whatever the borrowing cost you have spent, is supposed to be charged to P&L. Subsequently, the seasonal rains during the August. Okay, siege is the construction work for the month. Okay, 1 month also here also. Calculate the borrowing cost that is supposed to be capitalized. See, simple thing, 7 lakh rupees, correct na? Right. So 7 lakh rupees is what you have utilized. Into what is the rate of interest? 10 percentage. Wait 1 second. No, you have to, this is specific borrowing, assume first for the time being. If you assume specific borrowing, then the total amount of interest you are supposed to take it. 30 lakh into 10% is 3 lakh. 3 lakh is for what? 3 lakh is for 12 months. Correct na? 3 lakh is for 12 months, my dear. 12 months, but out of the 3 months you are not utilizing. No. Okay, 1 second. 3 lakh divided by 12 into 9, that is equal to 2 lakh 50. 1 second. Sorry, 3 lakh divided by 12 into 9. 225 should be the answer. Now question, subsequent to seasonal rains during the August. Seasonal rains, no, it's not abnormal circumstance. It is a normal circumstance. I'm sorry. Yes, yes. I taught you, if you remember one question I have taught you, there is a river construction is going on. Correct. Now I know that very much 1 month during the construction period, the river related example you have given. No, during this 1 month time, whatever the borrowing cost incurred, that is supposed to be capitalized. But in a specific year, if you have taken 2 months for the, I mean, heavy rains and water flow is high, no, then you are supposed to 1 month should be capitalized, another 1 month should be considered as abnormal, and such should be charged to P and L. And I taught you that in the classroom. Correct na here. So this, if I seasonal rains, if I consider as a seasonal rain, they only told that is expected to occur. So then what are you supposed to do, my dear? 30 lakh into 10 percentage, that is equal to 3 lakh. 3 lakh into 10 divided by 12, 3 lakh into 10 divided by 12 is equal to 2 lakh 50,000 should be my borrowing cost. Okay, yeah, 40th. TUV Limited is an outstanding $5,000, 5% loan on the finance of the construction of a new building, spot rate and etc. Correct. Now, exchange loss is equal to 7,000 recorded in the previous year. Correct. Last year 7,000 you have recorded in the previous year. Calculate the borrowing cost that should be capitalized. Foreign exchange gain or loss, rate of the interest. Look at this, my dear. Right. Beginning and end of the year. Beginning में कितना है रे? 48,000. End में कितना है? 46. That means is it a gain for you? Yes. How much is the gain? 2 rupees per this. 2 rupees into 5,000 is equal to how much? That is equal to 10,000 rupees is a gain, foreign exchange capital gain. But already how much is the foreign exchange loss have you capitalized with the asset? Assume it is 7,000 was the capitalization you have done. Okay, right. Rate of interest, no, you have to actually calculate, go back and calculate. If I say 7,000 is the, I mean, let me calculate it thoroughly. Let me do it now. It won't work in that so short way. If I try to do, I'll do mistake. Yes, I'll calculate like this, my dear. So that is equal to $5,000. Yes, in the first year itself, but first year itself not a point. Okay, if you have borrowed in India, what are you supposed to do? The beginning and end of the year he gave. But the problem is what? No, when you have borrowed, what was the rate at that time? We don't know. Okay, right. What is the spot rates at the beginning and end of the current year he gave? Foreign exchange loss, this was in the previous year. This is the number he gave. So I can't go back. Right, not a problem. So now what are we supposed to do? $5,000 into, and what is the rate of interest? 5%. That is equal to 250. Yes, 250 or 25. 5,000 into 5%. $250. $250 into how much, my dear? Year end rate is equal to 46. So 240 into 46 will become how much? 11,500. 11,500 will be borrowing cost. No doubt. Done. So 11,000 will be borrowing cost without any doubt. Next, foreign currency. Okay, right. Hold on. Foreign exchange gain is equal to 10,000. Yes, foreign exchange gain $5,000 into, I mean, 2 rupees. If I take it 10,000, but actually out of 10,000 rupees, 7,000 assume that that has been already capitalized in the past. If you had already capitalized, what are you supposed to do? You are supposed to reverse the same. Yes. So foreign exchange gain, correct na? Right. What are you supposed to do? Foreign exchange gain out of 11,500 borrowing cost, say, is 7,000 rupees you are supposed to cut it. If you cut 7,000, that comes to 4,000. How much? Somewhere I did mistake, I feel. Let me see. 4,500 will come down, correct? And Total what is going to be capitalized in the current year? Just a second. Yeah, this is only right, I feel. Yes. So end of the day, what is going to be the my borrowing cost? Mhm. No, my dear. This is interest rate is equal to, okay. 1 second. If I had borrowed in India, what would I have got? 10 percentage. 10 percentage, so that is not relevant to us. Hold this on. The answer seems like this, but I have a doubt. Some information I feel something is missing. Okay, right. Let's just hold this bit aside. Yeah, taking time actually. So 41. Which of the following borrowing cost should be capitalized to the cost of asset? This is repetition. Did borrowing cost of which on which following type of borrowings to be capitalized? Short term, long term, both actually. It actually doesn't. I mean, we spoke short term, long term, any correct now. That's why working capital gain loans also general borrowing में आ जाएगा. Next, UVW has 12% debentures of 20 lakh rupees which were raised on 1/6/2020. Okay. And 10% term loan on 15 lakh rupees obtained on 110. Calculate the capitalization rate for the financial year 2021. Yeah. So what is that? You are supposed to calculate weighted average borrowing rate. You are supposed to calculate. Yes, we did so many sums in the class. So what are you supposed to do? First one is equal to 12 percentage 20 lakh. Which date you took? Date of loan is equal to 1/6. Yes. Next one is equal to 10 percentage loan 15 lakh rupees. Which is this? This is on 110. Calculate the calculation for 2020 or 21. That means March. Okay, fine. How much is the number of months? Number of months if you take this is equal to 10 months. Why 1/6? No, 10 months. 110 means 10, 11, 12. That means 6 months here. Yeah, what is your interest element, my dear? 20 lakh into 12 percentage. 20 lakh into 12 percentage. 2.4 lakh rupees. Okay, divided by 12 into 10 months if you take it, that is equal to 2 lakh rupees is interest. 2 lakh rupees interest. Done. Next, 2 lakh rupees interest. What about this 15 lakh? 15 lakh into how much percentage? This is 10 percentage. Okay. Divided by 2. 6 months only, na? That is equal to 75,000 rupees is the interest. Next. Adjusted principal you are supposed to calculate. Why? Because the loan is not there for the full year. So 20 lakh divided by 12 into 10 you are supposed to do it. That will come to 16.67 lakh. Okay, in the same fashion, 15 lakh also will become what? 7.5 lakh it will become. Okay, 16.67 plus 7.5 lakh rupees, that is equal to 24.17 lakhs. Yeah, total will come to 2,75,000 interest. Yes, so 2,75,000 means 2.75 thousand divided by 24.17, correct na? Into 100 if you put it, it will come to 11.37 something 37 percentage is what my answer, which is D is going to be nearby. Okay, yes, D is nearby. D is only right answer. That's all. This is what did I do? 2.75 lakh divided by 24.17 into 100 we did. That is equal to 11.367 something it came, which is rounding off number, that is equal to 11.33. Okay, done. 44th bit. We have totally 50, so another 6 bits are there to clear it. XYZ Limited acquired 500 lakhs at 20 percentage and 1000 lakhs at 15 percentage. Expenditure on the qualifying asset incurred on 8 at as 800 lakh on the qualifying asset for 9 months only. First, what are you supposed to do? Calculate the borrowing rate. A borrowing rate, what are you supposed to do? To 800 rupees lakhs में 9 months you are supposed to do it. On 500 lakh rupees you are supposed to do 12 months. Then you are going to get the answer. Okay, this is easy thing. I have done just now borrowing cost I have done. That's why I don't want to do this again. PQR Limited has a specific borrowing. Look at specific borrowing. 9 lakh rupees at 10% construction of. And there is a general borrowing of 40 lakh at 12%. Only one is there. So no problem. Okay, the expenditure on the asset was incurred is equal to 12 lakh. So what are you supposed to do out of 12 lakh? First you should assume that 9 lakh specific borrowings you have taken. So 3 lakh rupees only utilized from the general borrowings. Okay, right. 12 lakh was 9 months. Not a problem. So 3 lakh is for 9 months means what are you supposed to do? 9 lakh on the 9 lakh 11% you have to apply. On 12% is general borrowing you are supposed to apply on the 3 lakh rupees. And 8 lakh rupees, correct, 20 lakh rupees 6 months, 8 lakh rupees 3 months. Yeah, simple calculation you are supposed to apply. Yes, we can do now here, not a problem. So first 9 lakh rupees mein, okay, first 9 lakh rupees into how many months, my dear? Total into 9 lakh, 11%. Yeah, how much you spent first year? Sorry, which one? You have incurred 12 lakh. Fine, I'll take into first lot, right? For this, which rate 11% is applicable? Yes, let me take 9 lakh into 11 percentage. Yeah, into 9 months only. 9 divided by 12. That is equal to 0.7425 will come. 1000 lakhs. Okay, 74,250. Next, 3 lakh, what is the rate it will come? 3 lakh mein weighted average rate is supposed to come. That is equal to into 12 months. Into 9 divided by 12, you should apply. Yes, so 3 lakh, I'll take it full number into 12 percentage. Yeah, divided by 12 into 9 months. That is equal to 27,000 will come here. And this is 74,250. Next, next money you spend 20 lakh. 20 lakh you must have taken from the general borrowing. So 20 lakh into 12% only you should apply, and you have utilized it for 6 months only. So 6 divided by 12. So 20 lakh into 12 percentage divided by 2, that is equal to 1,20,000 rupees. You should capitalize it. Next number is what, my dear? 8 lakh you took for 3 months. Okay, 8 lakh. There is also general borrowing se amount aa gaya. So 3 divided by 12. So 8 lakh into 12 percentage into 3 divided by 12. That will come to 24,000 it will come. Yeah, so total amount, my dear, 74,250 is one number. 27,000 is another number. 1,20,000 is one more number. Plus 24,000 is next number. 2,45,250. 2,45,250 is something E number. I can take it. Let me check with the answer also. 45th question. Perfectly alright. Okay, 2 lakh. Total amount is 2,45,250 is the answer coming. All this, what sum of 1, 2, 3, 4. That's it. This is the correct answer. Next, the following details are given in respect of a qualifying asset. Expenditure is equal to 2 lakh borrowing capitalized during the last year. 20,000 borrowing specific to not yet repaid. Assets transferred to the construction of a qualifying asset. Expenditure on the qualifying asset. Progress payment made. Progress payment made is irrelevant to you. Now, new borrowing specific loan is equal to E%. Calculate the borrowing rate that is supposed to be capitalized. This is also same. I mean, you just need to spend little time more on this. This kind of sums we have discussed in the classroom. Just go ahead along with that. Assume the above case borrowing is general borrowing. Then calculate the borrowing cost that is supposed to be capitalized. Yeah, same continuation question. Capitalization of borrowing cost shall be suspended during the temporary period of delay. If it is directly attributable to the construction of a qualifying asset, then you should not. Otherwise, you should. May be suspended only during the extension period of the delays in which active development is delayed. Yes, this is correct. Should never be suspended. Wrong answer. Shall be suspended only during the extension period of delay in which active development is delayed. Yeah, this is right answer. This is wrong answer. Why means here used may. Here is shall. This is correct answer. Find the cost of borrowing. You are building a bridge costing 200 million. 120 million is financed from the long-term loan costing 8%. Remaining 80 lakh crores, 80 millions is coming from the pool of loan, that is general borrowing. 35% of the pool loan is 10% cost. 65% of the pool is equal to 12% cost. Using this information, cost find out the following cost. What is there here? Correct, na? Yeah, 10%. He has given 10%. 35% 0.35 pool weighted average. that is equal to 3.5 percentage will come plus, and the next pool is what, 12 percentage is casting, that is equal to 0.65, multiply 0.65 into 12 percentage, if I take it, 7.8 will come. Okay, 7.8 plus 3.5, if I do it, that will come to 11.3 percentage. What is this? This is weighted average borrowing rate. That is your capitalization rate. Yes, out of 200, May, what did you do? You did a specific borrowing of 180. 180 into 8 percentage. 180 into 8 percentage will come to 14.4 lakh rupees capitalization straight. And 80 into 11 point, correct na? 80 into 11.3 percentage you are supposed to apply. Correct. Apply 80 into 11.3 percentage. If I apply 9.04 will come. Yeah, 9.04 plus 14.4 will come to 23.44. Correct. 23.44 will come. Right. Hold on. Find out the cost of borrowing for the first year. Yes. How come wrong? Using the information, find the borrowing cost for the first year. You have done correct, no? 120, no? Sorry, 120 into 8 percentage, no? Yeah, this is 120. I wrote here 120, but I calculated 180. That is the wrong mistake. 120, correct, no? Here 120 million. Yeah, 120 into 8 percentage. 9.6 will come. Yeah, 80 into 11.3 percentage. That is 9.04. Yeah, that is 18.64. Yes, this is 18.64. Correct answer. Last question. Q Limited has decided to divest its food division 2 years ago. Okay, divest. I mean, since you have come out, and has therefore classified the assets belonging to food division is held for sale. Fine, perfect. Right. Management of the Q Limited has estimated the cost to sell the nominal amount of 25 lakh rupees. Okay. Nominal, I mean, what is that? As estimated the cost to sell the nominal amount of 25 lakh rupees. The present value of the cost to sell the beginning of the year is equal to 10 percentage. Cost of capital is equal to 20 lakh 66,000 rupees. The amount of interest that should be capitalized in the current year is equal to how much? Yes. Read it once again, you will get. Q Limited has decided to divest. Fine, not a problem. Management of Q has estimated the cost to sell the nominal amount of 12.5 lakh rupees of 25 lakh rupees. Present value at the beginning of the year is 10% cost of capital, 20 lakh rupees 66,000. The amount of interest that should be recognized in the current year. I don't think I didn't get the concept here. What is that? Which is held for sale. Management of the Q has estimated the cost to sell at a nominal amount of 25 lakh rupees. They wanted to sell it. That's not a problem. Present value of the cost to sell is equal to 20 lakh rupees. Okay. Cost to sell at the beginning of the year is equal to 10 lakh. The 10% cost of capital is equal to 20 lakh. 20 lakh 66,000. Okay, the amount of interest cost to be recognized in the current year. Regarding what? I didn't get exactly. Fine. There are two questions in this class, correct? Which needs to be answered. Right. Let me obviously clear it at later point of time. Okay, my dear. With this, we are done with Ind AS 23 ka MCQs. Right. Once I finish everything, we'll take up some separate. What is that? Separate questions in the sense, not MCQ style alone. Okay. What do you call? It's case study. Case study also we'll try to handle it on one day, one case study, something like that we'll plan. Right? Any questions you have?